Uncle Joe
Uncle
Lorick in the house.
Joe.
Hey, good morning. What's going on, everybody? You had a good
Suited
weekend?
up today too, y'all.
Yes.
Yeah,
Looking
listen,
He looked like
good,
one of the
suited and
detectives
booted.
on the Law and Order.
I had to put. Listen, I'm not them. All right, I'm not them. I ain't them boys.
You
But
looking like, yeah, we just want to ask you a few questions.
just a few questions. No, I have a closing to attend. Remember, I told you guys that my parents had purchased. I mean, they sold their property and purchased it. And I was their real estate agent.
Yes.
Well, Monday we sold their home, and
Okay.
today we signed up paperwork to buy their new home. So it's a
Oh, good
celebratory
stuff.
day. You know,
Now
we're
that
gonna
was
have a good
less than
time.
30 days, am I correct?
It was less
He
than
said
30
he
days
wasn't
on
playing.
both.
He said he wasn't playing.
Look, God wouldn't plan it, we wouldn't plan it, we got it done.
Uncle Joe, you gets it done.
Hey, that's my job, especially for my parents. You know, I got to take care of them.
Absolutely.
You know, they've been taking care of me. I got to take care of them. So we got that deal done.
Okay.
I leave here. I sign the paperwork, get everything, and then I got to take the suit off and put the moving clothes on. Okay, then
You got double duty.
Hey,
Yeah,
hey, I'm
well,
still,
when you're
I'm
moving
still a
that
son.
fast.
Yeah, but I'm still a son, so the boxes still got to get picked up
It
and
was
the
like,
furniture.
thank you for the other stuff you did.
Right.
Now,
Right,
move
right.
these boxes.
It's time to get to the real work,
Where that
sir.
truck at, brother?
Exactly. Pull that truck out and get this stuff. But nevertheless, look, it's Wealthy Wednesday. I'm going to have one public service announcement first and foremost before we get into the topic. Look, guys, today is the day. We spoke about it previously. You must pay your Easy Pass bills.
Yes.
If you have a civil penalty, trust me, guys, you can save so much stress, so much money if you pay today. I told you guys to pay yesterday, but today up until 11:58 p.m., you can pay your bill, your outstanding bills, and avoid those civil fees. And those civil fees can be, I'm telling you, when they add up, they can be 5 to 6 to 7 times your actual bill.
Wow.
You know, and be thorough. I was telling somebody earlier today, look, if you had a car and you switched cars over the last year or so or 2 years, check your old car. If you change addresses, make sure that you have your bills paid for one address and the other address. Be as thorough as possible, because once today passes, y'all, there's no mercy on them bills.
Okay.
Okay, they're not waiving
11:58,
anything.
he said. They take 2 minutes away
Yes.
from you, so get on it.
11:58. Look, do it now. Do it well after you listen to this session.
Right.
Then go ahead and do it. In fact, after the show goes off, take a break. Go ahead and then come back
So
to the
that's
show.
11:58 tonight.
11:58 tonight p.m. That's the deadline. Once that time passes, you can't take care of paying your bills without having those fees automatically waived.
And
Okay.
the fees in most cases were considerably more than the actual fine.
Absolutely. On average, they're $25 to $50 per transaction, and you know it costs $3 to $6 for those tolls.
Wow.
Yeah. Yeah.
Okay.
That's how it gets.
Adds
That's
up.
ridiculous.
But as I previewed earlier on social media, today the topic is, look, let's not get fooled again.
Again.
Fool me once, shame on you.
You sound like George Bush.
George, right, George.
Yeah, George Bush. You know, fool me. Can't get fooled again.
You can't get food again.
But specifically, look, guys, I'm gonna throw out a couple numbers and I'm gonna tell you what we shouldn't get fooled about again. Okay. We know this past week we had Black Friday and Cyber Monday just a few days ago, right?
Right.
And we spoke about that weeks ago too, speaking about how much money was going to be spent, how much has been spent in the past. Well, I do have the official numbers, okay, of online sales. And for Black Friday, we broke a record. $9.12 billion was spent. For Cyber Monday, the estimation is about $11.8 billion.
Wow.
And for the entire weekend, starting Friday, we're talking about $35.27 billion, which is up 4% from last year.
That's
Even
crazy.
with the interest rates being
Yes,
high.
yes. And they said it's not even just based on, inflation played a small part, but in terms of our consumption, it's higher. The actual sales is higher. So it's not just because things cost more. We literally spent more.
That's so odd because, it seemed like, you're looking at the vibe and folks on social media and I'm not out. I'm not spending money. I'm not going to be out Black Friday. I'm not. But
Well,
you're saying
they weren't out. They weren't out. These
they're
are
shopping
online sales.
Right.
Yeah. So they weren't out, but they were still spending the money.
Right.
And
Interesting.
in fact, at the peak hour or peak minutes of sales, it was an average of $12.8 million being spent per second. Okay, $12.8 million per second. Crazy, right?
Folks are shopping like that.
Yes. But see, that isn't the trick. All right, that's not even the part that I'm red flagging today, okay? I just want to let you know what happened was when I looked at those numbers, it's always in the details. And the details showed me that there was an 80% increase in BNPL installment plans. Okay, BNPL stands for buy now, pay later. It's something that has only recently come up where your payments can be broken up in 4 parts and you pay no interest.
Right.
Yeah, and it's a soft credit check, so it's not about your credit score. So it's a new way to get short-term loans where you're not paying interest. And then the fees and everything can be different. Now, if you get a longer term loan, let's say if you stretch it out to 6 months to a year, they can be interest.
So we're not talking about like Klarna or Afterpay.
No, that's exactly what I'm talking about. Klarna, Afterpay, Zip, that's exactly what I'm talking about. And on the surface level, that sounds great, right? You have access to money. If you're having credit issues, and it's not just for like buying electronics, you can pay for your medicine, you can take care of medical bills, you can pay your rent, groceries. These are places that are lending you a short-term loan, right?
Right.
But there's an issue with it too. Okay, when we've seen things like this before that haven't worked in our favor in the long term. Okay, first of all, remember you had payday loans, right? Everybody remembers payday loans. Well, payday loans, we're only as black people 13% of the population, but we're 23% of all storefront payday loans, according to the University of North Georgia. Okay, so we dominated that business in terms of the people that paid a lot more in fees and everything else, and loans itself, right? If y'all remember back in 2006 through 2008, we had the subprime lending crisis, right? Where us and Latinos were 2 to 4% more likely to get a subprime loan than any other race in America. So this was something that was available to everyone.
So what is the subprime?
Subprime loan was the loans where, let's just say, if you didn't have a lot of money to put down and interest rates were higher, they would initially get you the loan with a lower interest rate where you didn't have to put in money, but then it would balloon later.
Right.
Yeah, so then you would basically say, look, I can't get a traditional loan. My credit's a little weak. I don't have the money, but I can get this subprime loan, which will allow me to get more house, a bigger loan. And then eventually we would say, well, in the next 5 years, when you have to pay more, you can refinance. That was the sales pitch.
Right,
or you can sell it because the property will be worth more, but then that didn't happen. Then you had obviously the crisis that we went through.
Right. People were just abandoning homes,
Right.
just leaving them.
But initially, I'm saying it looked great. It enabled people who didn't have the assets to go ahead and get a bigger home to fulfill the American dream. So I'm not saying that the sales pitch isn't legitimate. People that have been held back, people that have suffered are being given an opportunity to get access to American wealth. Okay? Now, in this case, it's the same thing, but it's a different play and it's actually more dangerous. The reason it's more dangerous is because, look, all right, when you go get a subprime loan on a vehicle or you get a subprime loan on a home, those payments are stretched up over time. Yeah, you pay more than you should, but you truly couldn't afford, most people couldn't afford to outright buy or purchase a home. They couldn't outright purchase a car. But now that you're putting that on smaller objects, these are things that we can purchase outright, but we're choosing to stretch out the payments. For an example, you go on your favorite sneaker website and they're set up to with Nike and different companies like that where, okay, I'm going to get these $500. No, $500 is a little too much. I don't like that. But you know what? When you spread it across 4 payments, I can do that. And when they advertise it, they're showing it spread across 4 payments. So you see that shoe come up. You see that electronic equipment come up. Anything come up.
$125.
It's $125. It's $89 a month instead of $600, instead of $700.
Right.
But here's the issue with that. Okay? The issue with that is you're not making more money. You're just getting more debt and spreading it over time. And as those build up, then we get into more and more problems. Now, here's where we have to look at the trick. Okay, part of the trick. When you look at the truth, I think it's called Truth in Lending Act. Okay, the Truth in Lending Act came out to make sure that we got clarity about our loans. So on your credit card statements, now it'll say, look, if you make the minimum payment and keep making it, you won't pay your bill off for 20 years. That didn't exist when I first walked in banking, but it changed and you had to put that out there. You had to say how much of your payment was going towards now interest and what's going towards principal. You had to be honest and transparent about your lending. Well, the businesses that qualify that, they have to have loans that have 5 payments or more. Now, listen to what I said in the beginning. Most of these loans, when they're 0% that they're offering you, are 4 payments or less. So those loans don't fall under the Truth in Lending Act. So they don't have to be transparent. And there is no laws across the board which say your statements have to say this. You can't charge this interest. None of those laws apply for anyone that's doing less than 5 payments. And these particular loans are set up for the most part at 0% at 4 payments. So that means you don't have to have clarity. That means that I don't have to fully explain about the fees. I might say up front you don't get fees, but then in the small print, small places, I don't have to put that in your face to say it's going to go up to 30%. To say we're going to charge you another 15% of fees, or there are no fees, but you're going to have to pay this interest and we're going to report to your credit bureau. Because initially, here's another thing. The other danger of this type of business is they don't report to the credit bureau, nor do they check it to see if you have one of these loans already. So essentially, you could get approved on one and get approved on all four in the same day and get thousands of dollars in access, which I get, it seems good. But what happens when you get so accustomed to that you're dependent on those loans? Because now I had those, I pay them down, I had those, I pay them down. Now you get in a cycle where you're paying something monthly and you're used to it to cover needs. Right. So this isn't for cars now. This is for mortgage. I'm using that to get my food. Right. I'm using that to get my clothes. I'm using that to take care of my gas. I'm using that to take care of real things. Now I'm depending on a loan each 4 months because it's 0%. One mistake, one thing goes wrong, one tire goes up, one thing goes out of place. And now you're in trouble. And now not only are you in trouble, it's reported because you're past due. Now it's going to show. It didn't show you were up to date. It don't show when you're paying on time. But if you go past due, we're reporting to the credit bureau. That doesn't sound like a favor to me. See, and I'm saying for us, these loans are once again being targeted towards us. They're saying, look, you guys, you don't have the capital to take care of these things. We'll give you a bridge loan, give you 0%, and you go ahead and buy what you want. I know it doesn't look like you can afford these Christmas gifts. You couldn't afford that. That's what PlayStation, whatever. But guess what? We'll break up the payments for you. It's not like layaway back in the day where you didn't get the product until you finish paying. No, we're going to give you the product while you're still paying, and your first payment might be 30 days out. So it's such a good scheme in terms of getting you to believe that you can do it. And it's easy access to credit because it's not checking your credit score. It's a soft credit check. But ultimately, the people that will use it the most will be the people at the bottom. And which means that we'll have to, again, what happens when we can't at mass pay those bills? What happens when we get so dependent on that free loan every 4 months that we can't escape it? Just like payday loans. Some people had to get a payday loan to pay off the payday loan, to pay off the other payday loan. Same scheme. It's being sold is something fantastic. But I'm telling you guys, again, just like I said about some of these electric cars, we should take a time out. Let everyone else build that up. Let everyone else. Apple Pay is the same thing. Apple is doing it too, where they'll allow you to pay on stuff is with their products, but they'll say, look, you can pay no interest over a certain amount of time, and it doesn't depend on your credit. You're just an Apple customer. It sounds great, but ultimately, with people who their budgets are tight, where they don't have $1,000 in savings, where they can't handle one emergency, we live in an optimistic world when they sell us like that. But realistically, something's going to happen. And then you're going to go past due. And now your credit is hurt even worse. And you owe money you can't pay. And you can't, once they shut down your lines, now how do you get the things that you were used to getting from those loans? That's why I'm saying, look, let's not fall for it again. You know, we've done it time and time again. We participated in so many of these things, so many of these products that are sold is something that will help us. Ultimately, it handicaps us. So I'm saying, look, you do what you want. I gave you the information. You know, everybody's responsible to make their own decisions. But it wouldn't be me if I didn't say look out for these things. Because, again, a big part of Black Friday sales online was using this mechanism. And I can tell you right now, those who comprise of the majority of the population of the United States weren't the primary users. We were, and everybody else was.
Because when I heard those numbers, right? Because I actually heard the numbers earlier this week. About the record-breaking numbers. And I was just like, I hear a lot of people complaining about how expensive everything is. I mean, everything. And we have record spending.
That's odd to me also.
But that's what it is.
It really odd. So that kind of brought some clarity on it. So you're not necessarily saying don't use the products.
I'm saying if you don't have the money to buy these things that this now gives you access to, don't use it.
And you're not historically financially responsible.
That's what I'm saying.
That's what it really takes.
That's what I'm saying.
Because like if you do a con or afterpay, right? and say you spend $200 on shoes or clothes. They break the payment up to 4. And you make the payments, then it's like, okay, it's done.
Right.
No problem.
Right.
The problem is when you don't.
And when you make those payments, just like a credit card, okay, you might have started off with a $500 line. Oh, you made the payments? We're going to increase that to $1,000. We're going to give you $2,000. We're going to give you $5,000. And we're going to get you hooked to this system.
Right.
And once you get hooked to the system, just like a lot of social programs that are for our welfare, but at the same time it's out there, you get stuck in that cycle and dependent upon it. And I'm trying to say, don't become dependent on, I can't buy this without this type of loan. Because when you do that, that's how you get into payday loans. That's how you get into subprime loans. You become dependent on something that wasn't built for you to become dependent on. Well, it might have been on their side, but not on our side.
So it's really a mindset.
Yes. It's a mindset.
And them knowing what the mindset is and taking advantage of it.
And knowing the timing. Think right now, first time since the pandemic, we've seen an increase in credit card debt. In fact, as of the third quarter this year, we had $925 billion in credit card debt. That was an increase of $38 billion from the last quarter. And that coincided with the programs from the pandemic ending. So as we seen all that assistance from the pandemic ending, all the PPP and everything else, we shifted the credit. And what I'm saying is that in addition to credit, we're shifting to this too. And this is even more dangerous than that credit, because even though that credit, it will hurt you, it's transparent. And there are laws in the books to make sure that things are enforced. These organizations, when it comes to those type of loans, there isn't straightforward laws. They're kind of outside of
the loophole.
Why would you make it so that your product that's at 0% is in 4 payment requirements, knowing that if you do 5 or more, that you fall under the Truth in Lending Act? Why exactly 4? Why wasn't it 3? Why 4? Right under the number 5? It's not a coincidence. It's a game. You know, that's how it works. So everyone just be aware of these type of things. I'm not trying to say what you shouldn't do, but I want to make sure we make informed decisions, because right now I know it's a lot of people that are vulnerable. The numbers show credit is going higher than it did before. The pandemic, we kind of calmed down, but now it's back the way it is. We don't have Band-Aids that we had before to protect us and now, or to help us. And now that those Band-Aids have been pulled off, now that that help has been pulled away, we're going to credit, and then we're creating a new bubble. Because the other part is, if this is not under the Truth in Lending Act, if we don't have that, just imagine if a lot of people use these loans, just like any other bubble, and then you have an economy that's used to having a certain amount of sales based on these bubble loans. And then when people can't use it no more, people lose jobs. Then you got to crash. That's how you get there.
So let me ask you this, Uncle Joe. Let's say because of the numbers, right? Because everything is analytics. And they use these numbers, do you think, to also increase the interest rate? Because it's like the raising the interest rate haven't stopped you guys from spending. So maybe we need to raise it even more.
Well, it's a combination. It does lend in the favor of, again, controlling inflation, because we're still spending out of control. But there are other numbers that are coming up. We are looking more like it could possibly be a recession. We got to look at layoff and job numbers. So it's a combination of things, but it does lend to the case to say we need to discourage spending and to get people who are not working from spending, because that's what their main thing is. The formula is saying that we need the people that are working spending, because then it's a cycle. But if you have people that are not working that are also spending, now you have more spending than working. So that's what creates an issue where, okay, we don't have enough supply for the demand, because we have more people that can spend money than we have people working to produce.
Because to even see Bezos hitting the headlines, discouraging spending, discouraging people from spending on large items, and warning of a recession coming.
Yeah, but Bezos can do that, but Amazon may work with some of these groups that I'm talking about at the same time too, to say you can spread that payment out.
So I'm sure they are.
You know, business is business. I hear what you're saying. What are you doing?
It's like putting the cancer warning on the cigarettes.
Hey, listen.
Trying to work it both ways.
Yeah. So be aware of these things, guys. Remember, as a recap, pay your easy pay loans. I mean, your easy pay fees.
Yes, by 11:58 p.m. tonight.
11:58 p.m. tonight. Make sure when it comes to these loans, these opportunities that look great to pay your bills and spread them over time period, remember, there are traps to deal with that. And when it comes to keeping up with your budget and financing, it can make it seem like you can have things that you can't afford. It's making things that you can't afford affordable, but you're still paying on it, and it's still taken from you. It just looks different.
Right.
You know, it's like somebody that catfish you on. Look, somebody dating or something. You know what I mean? You look at that profile, you see all that stuff, it look real good. Then you show up to the date, it ain't quite what you thought it was.
Yeah, I've seen that firsthand too.
Yeah. Don't get catfished.
I know some of these people.
Listen. Don't get catfished. Don't get fooled. Look, guys, it's been a pleasure. Next week we'll come with something else. Just make sure you you keep attention to everything. Make sure you stay prayed up. Make sure you pay attention to your own, and just take care of you, because people are going to be out here trying to take advantage of us no matter what we do.
Each and every Wednesday, 9:20, Uncle Joe is dropping these jewels for Wealth Wednesday. Where can they follow you?
At Joseph Lorick, JOSEPH LORICK, on socials. And look, if you have a questions, you can always reach out to me, DM me, contact me. But look, I'm busy today. I got to get to this real estate closing, all right? I got to get that money.
Selling houses in less than 30 days, man. He's getting it done.